Hello, I'm Perrin and welcome to the Business of Business. Throughout the pandemic, I'll be having a series of conversations with government officials, Canadian business leaders, and other experts about the effects of the pandemic, where we are at the present time, and where we go from here. We're very fortunate today to have someone who can give us a very valuable perspective about the Canadian economy and how we should be preparing for the next stages as we start to come out of the recession. Alec Morley is the head of small business banking, national agriculture services, franchise and professional banking, and the merchant payments business, within TD's Canadian Business Bank. It's an extraordinary collection of responsibilities that he has. And he's an extraordinary individual. He has more than 25 years of banking experience, and he's led teams in business banking, retail banking, asset management, technology, and digital payments on 3 continents, not only in North America, but also in Europe and in Africa. So it's an extraordinary career to have and a great perspective for our discussion today. Alec, thank you very much for joining us in the Business to Business.
Thank you, Perrin. Great to be here.
Let's start at what's the obvious question, and that's your perspective from where you stand as to where we are in this pandemic. What's the shape of the Canadian economy? Where do we go from here? Can we successfully come out of this?
Yeah, Perrin, if I think back to a year ago, roughly, and where we were and what we were thinking might happen or would likely happen, I would have never imagined, and I don't think any of my peers would have thought that we'd be in as good shape, economically speaking, as we are today. I'm not reflecting on the country's balance sheet or that sort of stuff, but just in terms of GDP activity. We get quite a unique perspective on where money is flowing in the economy as a bank. And I have a couple of sort of very specific perspectives. That merchant acquiring point of sale business you mentioned, we see all the transaction activity from the micro businesses all the way up to the big corporate retailers. And then, of course, in the small business bank, we get a read on how companies are doing. And on the small business side, as you know, the banks were fearing the worst, in fact, across the business spectrum. And we were provisioning huge amounts of funds against the potential need to write off bad debt as a result of the pandemic. And I can tell you, in the small business bank, our balance sheet is better and our customers' balance sheets are better today, as crazy as this sounds, than they were before the pandemic hit. We have a lower rate of loan default today than we did back in January, February, pre-pandemic. So as I say, you would have never dared think that would be the outcome. And it is perhaps a bit counterintuitive because there's also a lot of hardship and displacement that's been going on. But then I think looking forward from here, and this is my personal view, it's not TD Economics necessarily, so you're probably better to consult them for the final word. But I have a sense that the snapback is going to be very, very strong indeed. We're already seeing it in certain ways, demand for loans, and certainly the liquidity, Perrin, that is there in bank accounts, both personal bank accounts and business owners, is very, very strong. And that's a number of reasons. The government has obviously injected a lot of liquidity through their programs, but I think businesses and personal households have also adapted remarkably well by, very thoughtfully cutting their expenditures, just looking to optimize, defer stuff. So it's really quite an interesting situation. I think we might be surprised on the upside, and it might even go a little bit too far and start, driving some rates of inflation that could cause some problems.
This is in many ways the recession is unique, and this is the first one certainly that I can remember where personal savings rates are higher after the recession than going in.
Yeah,
and which speaks, I think, to the amount of money that governments have been pushing out into the society, and of course to what you were mentioning, which was was families looking to control their expenses and to make sure that their finances were sound. And our analysis is very similar to yours, that government has deliberately, artificially depressed the economy this last while by ordering people to stay home and shutting down businesses and so on. And that even the removal of those restraints means that we'll see a bounce back, which is substantial. But beyond that, there appears to be significant pent-up demand in the economy as well.
Yeah, and it's also fascinating because you can look at other countries, it's almost like a looking glass sort of thing, and you can say, oh, okay, well, there's one sort of economic trajectory there if stateside would be a good example, and just the sheer speed with which they seem to have been able to find their economic footing. It's encouraging, it really is encouraging. As I say, it could have been so much worse.
You mentioned that you were surprised by small business balance sheets at this point.
Yeah.
Have you a concern that as governments phase down support programs and reopen the economy, suddenly all sorts of debts come due, and that before businesses can get to, many of them have accumulated a couple $100,000 or more for SMEs of new debt that's COVID related. Yeah. Are you concerned that if they are not given the opportunity to get back on their feet, that the bills will come due and that we could see a wave of bankruptcies just as we reopen?
Yeah, I'm personally not terribly concerned about that. There's always going to be noise in the streets, and you will have experienced that, from your political days. And I think it's fair to say that once you bring out the helicopter and you start dropping cash, well, people start clamoring for more. That noise builds. Whether or not it's the best thing to be doing or even necessary at all is a completely different issue. So, I feel for the decision makers in Ottawa who have to try to see through that and make the right decision on how much liquidity is enough liquidity. It'll sound a bit harsh, but it is a fact that there is a natural turnover of businesses in any economy. And as hard as that is on an individual by individual case, it's actually healthy because it's a regenerative process, and it's a process whereby we ensure that we use our limited resources in the most optimal fashion. And you could argue that if you put too much money, liquidity into the system, and you stabilize everything, and such that you try to let no one fail, that you're actually hurting the long-term competitiveness and efficiency of the overall economy. Again, I'm not an economist. I think it's an interesting debate. No doubt you would hear different things from your many members in the chamber. But I'm to your question, I'm really not too concerned. I'll give you an example. CEBA, TD's share of CEBA, which was the $40,000 loan with 25% forgiven, and then the government added another 20,000 to qualifying applicants. TD's share of that alone is $10 billion. And our existing loan book before that point was about $7 billion. So inside of a year, we more than doubled the exposure out there. Now, it could be that we find that was too much liquidity and the folks don't have the capacity to pay, because we certainly didn't run any debt servicing tests when we got that money out the door. But what I can observe is that the liquidity, it hasn't all been spent. And maybe that's a failure of the policy in the first place, that it was intended to be put out into the economy. But Perrin, it really has been carefully, guarded by these businesses in aggregate. And a lot of the money's still there. And so I just don't worry. I think people are going to pay back for the most part. They're going to take that forgiveness piece, whether it's 10,000 or 20,000, and use that productively. But as always, time will tell.
can we pick up on this question of the role of the banks through all of this, and particularly as it relates to SEBA? The government banks just to push money out to business very quickly to ensure that they could remain liquid and be able to survive. The banks were a very convenient way of doing it because you had the network right across Canada to be able to do so. What role did TD play in all of this, and what was your experience in it? How smoothly did it work? Were there hiccups in the program, or do you believe that in similar circumstances a program like this would make sense?
Yeah, there's there's a lot of unknown heroes through that process, and many of them in places like finance, Ministry of Finance, in the civil service side, who this time last year, perhaps last March, April, started scrambling, knew that something was needed, enlisted the banks, and the banks all rallied and came around. It was a bit like the wartime commandeering of peacetime assets and operations. You take the cruise ship and it becomes a troop ship. In this case, you took the banks and becomes your distribution, your way to get liquidity out into that market. I remember the early debates that were happening with finance and with my other, I'll call it the big six bank colleagues. And the big six banks compete fiercely. But in this case, they came together, and they came together for the social good, and realized the potential severity of the moment, and worked very, very well together in conjunction with the government. But the debates, Perrin, were interesting. And finance's starting position was, okay, we need liquidity in here, but they were really thinking about what I'll call the mid-market, sort of bigger commercial enterprises. And almost in unison, the banks said, well, actually, the businesses that are most at risk right now are your smaller businesses, because they have the least working capital, and they're going to run through that buffer fast, and they're going to hit a wall, and then you're really in trouble, because they're the ones that are employing just a vast number of Canadians, and are such an engine, as you know, and your members know you're the engine for the economy here. And very quickly, the government pivoted, to their credit, and came off these more complex, these more sort of unwieldy loan programs to the larger companies, and went, okay, let's just design something that's really quick to market with as little friction as possible. And that's what SEBA would be the best example of that. And I feel good about TD's role in there. When you're around a table with peers, you need everybody to function. You got to take your ego and put it in a filing cabinet, and your brand and everything else, and just work for the greater good. And we just feel really good about having done that, right out to the people in the field who just spent countless hours counseling worried business owners on, okay, it's coming, here's what to look for, and then when it did come, here's how to handle it. There's still questions out there in the field about some of the applications that haven't been fully processed yet. It's been an extraordinary effort, and TD has of 211, if I can just boast for a moment, 211 FIs participating, TD has accounted for 24% of the total SEBA money, as I say, about $11 billion to our customers who were borrowing and non-borrowing customers before. So it's a moment that I won't forget, and I'm really actually looking forward to getting together with those individuals in finance and at EDC and my colleagues. This is all done virtually, as you know, right? This was all cooked up and managed on weekends and late nights and lawyers and all sorts of stuff. But
one of the advantages, I suppose, of the past year has been I've had the privilege of talking to just a tremendous range of senior business people in every sector of the economy. And one constant theme that comes through is they say to me, the place won't look the same after this is finished. We're not going back to where we were before. We've made a leap in terms of how we do business, our relationship with our customers, and how we organize ourselves. One of the things that at the Chamber we've been trying to get a handle on is what are the permanent changes, good and bad, that we're seeing here? And are there areas such as digitalization where we've moved ahead so quickly, where we can come out of this actually stronger than we went in.
Yeah, yeah. Well, viewed through a Canadian lens, one of the biggest, most successful, globally most successful tech companies right now is, of course, a company called Shopify, and they're an e-commerce company. And they were already going great guns before the pandemic, and the pandemic just supercharged that for all the obvious reasons. They were right place, right time, and huge credit to them for doing that. And there's a single company there that I think is a great example of a good outcome for the country, and I think globally. And I'm proud of a company like that because they are enabling many smaller businesses rather than dominating them. And I won't name any names, but I mean, that's been a reality of the digital age here, as you get a couple of really big players, and they have created all sorts of benefit and advantage to the economy in other ways. But I like what e-commerce can potentially do for the small players. And it's not just Shopify. It's we're working to do it on our merchant business with our bricks and mortar retailers to help them go to what we call sort of an omni model. And they can do curbside, and they can do web-based and mobile-based transactions, and that is just the productivity lift is hard to quantify in the beneficial lift. I mean, I have two daughters, university age, not a whole lot of summer jobs out there. They decided, okay, well, we've got a little bit of a market garden here, and we make this really good granola, and before you know it, they've got a shop front set up, and they're away, and actually they're generating real revenue. And that simply would not have been possible even 5 years ago, 10 years ago, certainly. So that's hard to really comprehend. I mean, that is not going away, and it has all sorts of power and benefit. I think another one that's interesting, you haven't seen it as much and haven't really talked about it as much, but we do know that we've had a bunch of supply chain issues, and we continue to have supply chain issues globally. And so this concept of 3D printing and bringing some of the manufacturing processes that are currently strewn across the globe, some of those I think are going to come back, again, enabled by technology, and that can be a kind of a second industrial revolution where the garage comes back into play and people can actually participate in these larger scale economies, but in their own specialized niche. It's this very odd circumstance where you can't help but encounter instances of hardship and displacement as a result of this event, and it's heartbreaking. It's truly heartbreaking because these are people's businesses, these are people's livelihoods, and there's no question that lives have been damaged as a result of this, notwithstanding all the various efforts. But equally, it's hard not to be very, very optimistic about what can come out of this. And again, we see it as a small business bank. We see these stories of resilience and adaptability and creativity. I could carry on forever. I can give you a couple, but you just shake your head, and it is so impressive. And sometimes, what's the old saying? Necessity is the mother of invention, and we've seen it, right? And I think that's a good thing for all.
I think one of the things that would be of interest to our viewers is the fact that well before the issue of the relationship with Indigenous peoples became a business issue in the way that it is today, you were engaged at the inception of the First Nations Bank of Canada and have played a key role with them. Tell us about that.
Yeah, that was my first project at TD. That was over 25 years ago, and I'd actually been working. I've worked for one other bank in my career. I never thought I was going to be a banker, but it turns out to be a pretty good gig at the end of the day. But the first bank I worked for was a bank in, I'm from Toronto, Etobicoke, but I landed a job with the Standard Bank of South Africa. And it was right around the time that Mandela was being released and that the country was going to free and fair elections. And the banks, very similar in structure to the Canadian banks, had to pivot very quickly and say, okay, we better do a better job of addressing the entire South African marketplace, because under apartheid they had not. They had cherry picked, the white middle class. And so I got myself into that, and as a young person, it was living history, and it was very exciting. I realized I was a Canadian. I came back to Canada around 93, 94, and it was the time of Charlottetown and Meech. And Canada had its own issues that it was just beginning to really confront, with the land claim treaties as well coming through. And TD, to their credit, realized that this was an opportunity not just to window dress and sponsor a few Indigenous conferences, but to actually try to institution build and transfer some knowledge. And what that ended up being was a very much a joint effort with the Indigenous communities in Saskatchewan in the first instance, the Federation of Saskatchewan Indigenous Nations, that led to the First Nations Bank of Canada. And that was a project that, because of my South African experience, where we were working on microcredit in the townships, I got put onto. And the neat thing here, Perrin, is 25 years later, that bank, which started out 80% TD owned, 20% Indigenous owned, is now the reverse. It's 85% Indigenous owned. TD retains about a 15% share. It's the only non-Indigenous shareholder. And we have a seat on the board, a single seat. And so I've just been asked to join that and represent TD in that board seat. And it's fun because, that was, it's like life's a big circle, you go back to where you started.
Let's turn for 1 minute to the E in ESG.
Yeah.
What do you see as the role of the business community as it relates to combating climate change, and particularly the role of our financial community?
Yeah, well, it's been an issue for a long, long time, but the speed at which it's accelerating now is something to behold. And we have TD Securities has for many decades an energy group. They follow the energy industry, and they would advise on mergers and acquisitions, and they would raise capital and lend and so forth. They have set up an entirely new structure around renewables, and that's in Calgary. Just think about that for a second, Calgary. But that is also the seat of innovation for some of these next generation energy generating capabilities. So it's real. I also run the agriculture bank across Canada, and agriculture is both the single most important industry because it feeds all of us and feeds the world. And Canada has such an incredible track record there. Our Canadian farmers are the best in the world, in my opinion. But at the same time, there's a pretty big footprint. There's a pretty big carbon footprint that gets left behind there. Again, I'm an optimist because I think that you bring technology together with committed institutions and funding and a government that can enable this and get you over that carbon bridge to the green pastures, that amazing things can happen. And I'm optimistic that is exactly what's starting to gather momentum here. But I want to be clear that this isn't like a flipping of a switch. And there's an economic reality here. There are many jobs and huge demand for energy. And as we come out of the pandemic, guess what? It's going to go right back and beyond where it was before. So you cannot just flip a switch and say no more carbon and no more farming the way we used to farm, and you got to go this way. It's going to be a gradual thing. And so I think banks can just play a critical role in together with government and obviously key innovators to help that transition happen as effectively as it possibly can.
Final question. I'd like you to look at the future. You have made it clear that you're optimistic about where Canada's economy will be as we proceed through this year and probably into next year as well. But looking down the road, 2, 3, 4 years out, are you optimistic about how Canadian business can do and about the shape of the Canadian economy? Do you believe that we're facing an inflation tsunami, perhaps as a result of the amount of capital that's being pushed out into the system? What about the ability of Canadian business to be truly resilient and to bounce back and to be competitive in a dramatically changed global environment?
Yeah, you're right, Perrin. I'm chronically, obsessively an optimist, and so I don't know if that undercuts the credibility of what I'm about to say, but Canada is still the best country on earth for a whole host of reasons, and one of them is the economic opportunity that it affords a wide range of people. And we have the great benefit, and it's been the case since Lester Pearson in the 60s, of having opened our borders and welcomed in new Canadians from all over this globe. And you can't beat that. You cannot beat a country that has the ability and the brand and the attractiveness to draw on the best and brightest globally. And then to organize it in a way under common law and relative order, and with a I might add, a financial system that functions, and a stable currency and all those sorts of things. Are there threats on the horizon? There are always threats, as you know. You're dealing with them. You've dealt with them through your government days. You're running from one fire to the next. But I think if we stand back and look at where we've come from and where we yet can get to, it's a good story. And it's down in many ways to this really great partnership between the drive and the passion and the perseverance and resilience of the small business entrepreneur and owner and farmer on the one hand, and some of these larger Canadian institutions, the banks that have been around for 170 plus years, and a government that doesn't always get it right, but generally has its heart and its mind in the right place. So I'm bullish on Canada, Perrin, and also obviously very grateful for the chamber and all of your members for what you all do.
Well, Alec, after this emotional roller coaster that we've been on for the last year, that's a very good, positive, optimistic note on which to end. Thank you so much for being with us today, and thank you for your work on behalf of Canadian business.
Thank you, Perrin.